Welcome back to recording with me, Orb. You are here on Orb Plus. You know where you are. Let's get into it, shall we? We are currently on Thursday. Tomorrow is our last day of the week. We are after this right here. We're after this. We gotta get this right here into the green, into the positive, and far above where it is now in order to actually start trading with real life money. So, that being the case, let's get into the chart work. Cool. Okay. To start, we have our low here, high here. Boom. We're going to take this. Here's the key level. If it's respected, it'll go higher. If it's not, it'll go lower. I want to see something on a higher time frame right quick because I have a feeling this leg up is hitting something on a higher time frame. So we're going to take a look at this. Boom. That's almost filled a complete fair value gap on the higher time frame. It's respected it. It's almost filled it completely. What about the 4-hour? It's almost completely filled a breaker block on the 4-hour. And right there. It's almost filled this completely. If price continues up above that, that means it's going to disrespect this breaker block, at which point it will continue higher, right? If it stays below it, and we get disrespected fair value gap on the downside, means it'll go lower for the day. Let's see what happens today, shall we? Right now, the general trend is up. We've broken structure out of the most recent downtrend. This is on the 4-hour, about the 1-hour. We were in a downtrend. We're now in an uptrend. This is the NASDAQ that we're looking at right now. We're not even on the S&P at the moment. From here, we have break of structure, fair value out says price is going to go higher. It has gone higher. From here, we've had a mini retrace, back up, breaker block that has formed. Break of structure on an order block, price went higher. When price went higher, boom, we swept this high. Boom. Our price is continuing lower in the reverse fashion. This uptrend might have just been reversed from this move right here. We could be looking at a reversal back down. We do have a continuation here. Break of structure. If this candle closes in the next 45 seconds, it will be a confirmed this was a reversal and price is continuing on down. The question is, will it respect or disrespect this fair value gap? From here, we're looking for it to close within and continue higher, or close below and continue lower. And it'll be on the hourly time frame that it has to do that. Change this to white. I've had legitimately like 4 to 5 hours of sleep. That's just because I'm a very, 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 very bad sleeper. Not much I can do at the moment. I'm working on it. With that being the case, I think we've dissected the NASDAQ pretty well. I want to go ahead and start marking up the S&P 500, see what similarities we can find, and from there, continue on with today's day trade. Good. We have a high here, boom. We have our low here, boom. Good. Okay. On the S&P, similar situation. We have value gap here. Boom. Leg up. Retrace. Breaker block. Order block. Boom. Break of structure. Onset order block. Price went higher. Swept up down this high. Created a new high. After the sweep, price went continued down. We have a fair value gap. So this price is going to continue further down. Off of this candle right here, we have another fair value gap. This decides to close. We are within the fair value gap, unlike the NASDAQ. NASDAQ will be the lagging index in this case, because not only are we within the fair value gap, but we are currently in that move down to determine whether or not price is going to continue higher or lower. So we need to be on the lookout for that. That being the case, I think we've identified pretty much what we needed to at the moment. I'm going to go ahead and pause the video now because I don't see anything else at the moment that I could really identify. Let's go ahead and do the same thing we did on NASDAQ for the S&P. I want to know exactly what this right here is encompassing. So we'll go to the daily. Boom. Do we have a break structure? No, we're actually in a downtrend. No, we're not in a downtrend. We're not in a downtrend. I need to get that into my head. We have the potential to be in a downtrend now. We were in an uptrend. Boom, boom. We are technically still in an uptrend because this low does not close below this low here. But we have new high here, retrace, failed block. This would be considered a breaker block if this right here does not continue higher and close above this high, creating a new high. Though this right here works, and yes, we are still in an uptrend, this can be considered a new high if the next candle is a down candle. We want to see this break past this high here for it to be considered a new high. And continuation of the uptrend. If it's not, then these four can be considered a breaker block, and we are now looking for price to retrace back down and create from this low a new low. This could be the breaker structure that we might see today. If not today, tomorrow, the next day, next week, we don't know. The 4 hour, same situation here. We're in an uptrend. Right here would be our breaker block that we determined on the daily, right? Here's our retrace back down. Do we have any break of structure within this? We do not. Yes, we do right here. No, we don't. That's a low. Down, up, boom, low. This does not close below. Shot higher. Fair value gap on the high time frame. Retrace. Fair value gap inverse. Not yet. We're looking for it though. We might see an inverse fair value gap on this here soon on the high time frame. Let's move on over to this on the daily. Yeah, this daily's got more depictable thing on it. So this is not inverting a fair value gap on the daily. What about the weekly? So it's not inverting because this right here was our inverse fair value gap, right? It said price is going lower. This right here does not fill anything on the weekly. It doesn't fill anything on the day to fill a breaker block on the daily. It almost does right here. This would be our breaker block because again we had this right here, trace down, closure below this. That was our breaker structure, and then of the failed retrace, it said price is going to continue on down from here. Barrel on down. We saw a mini breaker structure out of it here. Retrace up, boom, and again another breaker structure, and price plummeted again on the high time frame. From this, we have filled almost filled a breaker block. So we're looking for price to continue higher based on this higher time frame confluence. On the 4-hour, do we have something similar? We have price right there. We want to see exactly what's going on here. So I believe this right here would be our breaker block on the daily. Price is sitting roughly in here, so we have not inverted this fair value gap on the 4-hour, but that's okay because this was an inverse fair value gap. We're looking for price to break past highs for it to continue much higher. So I don't think, like, there's nothing, roughly speaking, there's nothing accurately that I can truly depict and say yes, it is disrespecting something or filling something from over here in its past. Instead, I can say that price has gone higher, and due to the NASDAQ being the lagging index, we can't solely rely on it to say yes, price is going to go higher or lower. So far, the general trend is up, and I'm going to anticipate it continuing higher. Though on lower time frames, we have in fact swept a high and are now in a move down break of structure. We are technically in a downtrend now because we just broke structure there, swept, and then pushed lower. We have fair value gaps as well. 1, 2. In an attempt to make this an inverse fair value gap, we're going to wait for it to close below it to assume that yes, price is going down for the day. If it doesn't disrespect it, we know price is going to go lower. And I think what is happening now is the London fake out, where it was going to go higher, everyone thought, and now it's going lower, stopping everybody out. We're just watching it close below. Price still has the potential to move much higher. We want to see that happen. From this hourly time frames perspective, we're going to keep price right here, nice and visible. We're also going to go on the NASDAQ, same thing here, boom. You can see this overarch. We can see this overarch. Is there any difference that I can see in the S&T divergence on a higher time frame? The only real difference is this right here, but price point on that note is technically the same. Right here, leg down on the NASDAQ, right? Saying this was a retrace. Whereas the S&P wanted to push higher. It did push higher temporarily, but it still broke structure on the order block. And after the sweep, we see price move down. I'm going to go ahead and pause the video now. I know I've been rambling on for 18-ish minutes, maybe a little longer. Hopefully we get a decent trade, and we can actually take it today and make a decent profit. Well, I completely forgot to mention something. So this is cool and all. This hasn't changed. We have news today. High impact news. So this right here. Hello. Things have changed just a smidge. We knew about the French and German bank holidays. I'm primarily talking about the double red folder and the one orange folder all hitting at 8:30 same time, and the 10 a.m. folder, orange folder for the USD. We don't want to take a trade until after 8:30 has come and passed, and we see the reaction from it. We're going to pay very close attention around 8 a.m., or not 8 a.m., 10 a.m., because that is when our final folder hits, and the final real nudge in price action. We want to make sure that price action is going to stay in the direction we want it to be in, and from that, we can make profit off of it. That being the case, let's see what happens. I hope you guys can see this. Can you see this? Yes, you can. Good. So, this is what we're looking at right now per news. It is relatively high impact. Relatively. This has remained the same. This has gone higher. I believe I said this before. If it's less than forecast, is good for currency, which means if this is red, right? If it's less than 229, right? Good for currency means it's going to go down. So if it's red, down, green, up. We have these two here roughly the same. We have this one here, which is the biggest difference outside of this right here. The largest difference by far, and if it's greater than forecast, is good for currency, which means if it's green, it's going down, which is cool. We'll see it appear when it wants to. Yeah. I just wanted to point that out so that way we were on the same page when it comes to looking at this price action and really depicting what it might do, what it could do, what news has to say about today's trading endeavors. That being said, I'm going to pause the video again. We'll wait until either a key level is hit or something has happened to market in such a way that we now have to enter the trade or back out completely. We'll watch, we'll look, we'll see. We'll get it right the first time. Be right back. Okay, so we have hit 8 o'clock. We want to wait till around 8:30 before we really take a trade. I'm just noting the fact that, one, we're almost completely through the fair value gap. It has not closed, nor has it wicked past the fair value gap. I'm kind of reluctant to wait for news. Something tells me news is going to be the camel that breaks the... Yeah, the camel that breaks the straws back here. I mean, we already know what we're expecting. If it wicks past but closes above, we know price is going to continue higher. But if news is that high of impact, it'll potentially close below, in which point it'll be a reversal. But we want to be on the very, very careful side when we go to determine that that is, in fact, what's going to happen. Because technically, right now, we are in a downtrend. But the overall trend, even on higher time frames, says we are in an uptrend. So, that being said, we want to take this slowly, carefully, to avoid losing anything. That's what we're after. That's what we're doing. That's what's going to happen. We have fair value gap saying price is going to continue lower. So at the same time, we have this fair value gap here that's being respected. I'm going to say we can't count this one because it's the inverse to this fair value gap right here specifically. Where we will wait patiently for that to occur. Yeah, when 8:30 comes and goes, we should see enough price movement to determine that a key level was hit. I also want to say that we have not identified, like I have been looking at this chart for a minute now. I haven't been able to identify any other confluence outside of the higher time frames, like where price action, the highest high right now at the moment is. It's respecting and filling a breaker block at the same time, which means we could see price continue to move down, though the trend right now is in an uptrend, right? The previous high on the weekly is still pretty high up there. The general trend is up. Current trend is down. We have fair value gaps galore, and we're waiting on news. NASDAQ is halfway through the same fair value gap. The S&P 500 says it is almost completely through the fair value gap. NASDAQ is lagging behind the S&P by far. At least at the moment. Current price action says we have wicked past. We want to be very, very careful with it. We need to wait. 8:30. We need to see what happens at 8:30, and we need to go off of that. Plain and simple. That being the case, I'm going to do this. I have two views. I have the 10 minutes ago view, and I have this view here. That being the case, I'm going to pause the video one more time, wait for 10:30 or 8:30 to come around the corner. Once it has, we'll witness the reaction off of it together. Once it's done and out the way, we'll begin to look for a trade. Technically, we have had a key level hit, though I do wish to wait for 8:30 to come around. With that being said, I'll be right back. Okay, so we had news change. News has hit. It is 8:31 right now. We have boom, green, red, the same. All three of these hit at the same time. Price is moving down, according to news. Let's take a look at what that means. Boom, we have this here. Let's actually take a look at live price action. It has moved down. We have respected the fair value gap. It's wicked past it. Price is on the incline, back up. Do I want to consider that a key level hit? Kinda. I kinda do. If we were to consider this a key level hit, right? We've done it the same way on this as well. We move down to the 5 minute. Not the 1 minute, but the 5. Boom. What are we looking for? A respecting fair value gap. This says it's closed below it. I know better than to look at this. I'm looking at this. Same chart, about 10 minutes in the future, right? So 2 of these candles versus this, right? Well, we know this candle here does go low, but it closes up within this, right? And then the next two, even per the 8:30 mark, continues a little bit higher. 8:30 is roughly in there. 8:30 is roughly there. That's the news candle that's currently forming. Per news, we have 2 minutes and 25 seconds for that candle to close, and that is primarily what I'm waiting on right now to happen. For the higher time frame, if the fair value gap was respected the way it was supposed to be, we're going to see a break of structure on the 5 minute that's going to lead into our next confluence, which would be either a fair value gap, breaker block, order block, or an equilibrium, whatever decides to bring itself to fruition. We're going to wait and watch patiently for that to occur, because we're going to get this as accurate as possible, and we're going to look for repeat tests of liquidity. So when we're looking for that fair value gap, breaker block, order block, or price to come back down into equilibrium for us to actually take a trade off of, we're going to look for the breaker block that says failed retrace is going to continue higher. We're going to look for that order block that's supposed to be presented immediately after that to determine whether or not the break of structure is valid and that price is going to continue higher. If it does not break structure, but the resulting factor is that the sweep pushes past, we know price is going to continue lower per the general trend right here on down. But if it breaks structure, and on that order block specifically, we see price close above this high, I'm tempted to say price is going to move lower after it's finished moving higher, which we will see then on the 1 minute. The 1 minute will have a break of structure that we are going to exit the market on and then reverse position. We're going to try and take that trade a second time and collect the entirety of the profit going down. But before we can do that, we have to confirm that, one, this is a respected fair value gap. We need to see a break of structure on the 5 minute, which means closure has to be up above this, one. And then two, we need to see either sign of continuation, prices going up, or B, a combination of the continuation confluences from a breaker block and an order block presenting themselves, and the reversal confirmation that price is continuing down due to lack of break of structure, or on the reverse side, because it's a continuation confluence that we're after, a break of structure to the upside that says price is going to go higher. That is currently what we're waiting on, though. We have not broke structure yet. We had an inverse value gap here, which is cool. That's okay. Price continues on down. We had another fair value gap right there. Hasn't really closed below. It's not until roughly in this right here that we get a closure. Inverse fair value gap there. It's not. It's on the 5-minute that we see it being disrespected. Disrespected fair value gap means it's inverted, one, and then that the inverse is reversing the fair value gap here. So prices continue down. We are in a downtrend. That makes the most sense. It works. Again, we didn't see our key level hit until roughly in here. We want to see it continue onward. We want to see a break of structure. We want to see a confluence form from this point right here onward. We know that this candle here is news, and at the moment it has not broke structure. That candle has closed. We are on the next candle with 3 minutes, 19 seconds to go. I'm going to pause the video until I can find a new confluence, that confluence being a break of structure on the 5-minute or an inverse or value gap. In order to get an inverse or value gap, we need a closure above this candle here. In order to get a break of structure, we need a candle closure above this candle here. That being the case, I'll be right back. Okay? Okay. Okay, so relatively early, right? We did not get a break of structure, but we did get an inverse fair value gap on the 5-minute for the live action view, and you can see that there. We have one red candle down. There's an obvious gap there. That green candle's coming up and inverting it, right? That would be our inverse fair value gap that we've been waiting on for the 5-minute. From this, we're looking for another confluence on the 5-minute for continuation purposes. We're either looking for a fair value gap, we're looking for a breaker block, we're looking for an order block, or we're looking for an equilibrium. Because we did not get a break of structure, we're looking specifically, more accurately, for either an order block to occur or a breaker block. In a downtrend, a breaker block is a failed retrace down, which means, one, without breaking structure, we have what looks like an uptrend, right? And then from there, it retraces down but doesn't close below the most recent low. That's what we're looking for when it comes to breaker block. Order block, we're looking for a leg up that says, okay, we're going to take out a high, matches the level, and then sweeps liquidity on down. That order block will cause the sweep lower. It'll continuate that entire trend. Fair value gap, first sign of continuation that price is going to move down, is just a fair value gap to the downside. We're looking for that. Equilibrium, we're looking for price to retrace up, typically right before we see that order block, and then back down into liquidity sweep. That's what we're looking for. And then once we identified one of those four, we're going to the 1-minute. From that, we're looking for a break of structure on the 1-minute or an inverse fair value gap that says price is going to continue on down. We're looking for that retrace up, right? And then the break of structure back down to enter on, knowing price is going to go lower. Or we're looking for, on the fair value gap side, we're looking for a fair value gap down, 1-minute structure, up, fair value gap, enter, wait for it to cap, down. Just like that. The general trend at the moment for this is down. So we're looking for down moves. This is what we're looking for. Did we get an inverse fair value gap here? Yes, it closed above that there. We're on to looking for that break of structure, or sorry, fair value gap, breaker block, order block, or equilibrium. I know what I'm looking for. Simply put, I know what I'm looking for. That is a disrespected fair value gap on the high time frame. Says price is going to continue lower from here. I just had a brain fart. All of it just got derailed. What was I going to look for? This needs to stop. I don't know if you guys saw that or not, but all of my trading view just crashed on me. It didn't crash. I closed out of it because it was lagging that hard when it should not have. Should not have been lagging that hard. We're in a downtrend there. Good. On the hour, what am I looking for specifically? Well, we broke structure for this right here, for this candle specifically. We're on a down move. That's what this whole move is right here. We're on a down move. This is a move. It's disrespected the fair value. The said price is going to go higher. It went higher, disrespected, now continue lower. I am looking for sign of continuation confluence. My key, not my key level, my take profits should be roughly within this. We need to find more on the 30-minute and the 5-minute within this move down here. Because if it does not break structure on this right here, we know it's going to bounce up and continue higher. We want to be aware of that entire move. Nothing on the 30-minute. Let's check out the 5-minute. Do we have any lows we can take profit from off of this? Technically, this is a draw on liquidity. This is a draw on liquidity on the high time frame. But the low is right here. So we want to keep that relative to everything else. Do we have another low? Yes, we do right here. Good. Do we have a low lower than that? We do, but it's all the way over here. The next most available low is going to be here. And we are going to be paying very close attention to these three here. We know it's going to continue down. If it does continue down, that works for us. Let's actually take a look at this right here. Because that is a low we can also take a look at. Boom. From there, we zoom in. We have ourselves a retrace up, back down. This is our fair value gap on this candle here. We close above it. Close above that fair value gap, inverting it. From that invert, we're looking for a retrace down. To fail, that'll be a retrace breaker block, right? Or it'll be an order block, in which case it'll come up, sweep the liquidity, this leg down specifically, right? Will be the order block we're looking for that will cause the liquidity sweep up here. When it sweeps this liquidity, that'll be the inverse, the reversal that we're looking for. That reversal is not going to break structure, but it is going to test this high, close within, and then from that rally back down. When it rallies back down, what are we looking for? We're looking before that to the 1 minute for a break of structure that says yes, price is going to barrel on down, or an inverse fair value gap, because from this leg up there will be a fair value up on the 1 minute. We're looking for the inverse closure, and then from that enter and push down. This is a sell. We're going short on this. We're looking to get as much from it, so from there we're going to patiently wait for it. Do I feel confident in my ability to identify these? Am I confident in the trade that I've taken so far? Is it a valid trade for me to say that yes, we could take a trade on this? Yes. I'm confident in my ability to identify this trade specifically. I understand and know the risks of this trade. I understand that I could lose this trade for anything the market has to offer. Technically, we did not hit the highs or lows of London session or Asian session, but we did hit that inverse fair value gap spot on almost. And from it, I am more than happy to say that I am confident in this trade. We're not going to mark the one that was super low. One moment. So we marked 4 here, and then this one was way over there. I think this was like Monday's trade low, right? And then these 4 were the most recent low outside of the session highs and lows. We're going to look for these 4 to get hit first. We're going to look within this for a break of structure or inverse value gap to exit on. And if this right here, like if it continues down past this, yay, that works for us. This is extra. I wouldn't mind it hitting this, but we're going to pay very close attention throughout all of this for a break of structure or an inverse value gap to get out of dodge on, because we don't want to stick around to lose all that money on an uptrend back up. That being the case, we're on the 5 minute. You can see there we have an inverse fair value gap. It actually closes right on the fair value gap. I didn't realize that until just now. That's good. We have a second candle that actually more so solidifies that. It doesn't break structure, but it does solidify that fair value gap being inversed. We're on a retrace now. The candle immediately after that second one I just mentioned is a move down. If this move down is in fact a breaker block we can depend on, it'll be a failed close high, a failed close low. Breaker block, we'll be looking for an order block immediately after that, so the retrace up. That retrace up is going to test the high, most recent high, that is this high specifically. From this, we're looking for 2 things. One, we're looking for the order block to close within or above. If it closes above, that is a break of structure. This downtrend is over. We're about to move in an uptrend. 2, we're looking for that break of structure, or the order block specifically, to sweep this high, and only this high, to continue downward in the downtrend, into the move, right? Once that is finished and completed, we're looking for a break of structure on the 1 minute. From that says price is actually going to come back down. We'll take that trend trade there, look for a break of structure back to the upside, and from that, move up with trend. I think I've done good so far. I think I have. I'm going to pause the video now because I'm watching this form. It'll probably be super quick that I unpause this. It's almost 9 a.m. We have until 10:30 to trade. 9:50 is prime time to take a trade. News. There's one more folder that hits. It's at 10 a.m. We have an hour before that hits. Let's see what exactly happens, shall we? Okay, so I'm looking at currently a breaker block. I don't know if you guys here. We'll try and get this on camera for you guys to actually see it. So we have, I think, a breaker block there. Retrace back down in between a bunch of green candles, right? That retrace down failed to close below the most recent low. If I treat that as a break block, that's our sign of continuation. From there, what am I looking for? I'm looking for price to, 1, continue down in the downtrend, and then 2, I'm looking for it to break structure on the 1 minute and give me an inverse fair value gap. There's our failed retrace. We have a fair value gap there. There's an inverse fair value gap there. What am I looking for specifically to happen right now? Because technically everything is set up the way we want it to, right? What I want to do is I want to wait, kind of, just a little bit. I want to see, because that was a failed retrace, right? I want to see a break of structure out of the movement. I'll enter once we broke structure and the candle closes. The inverse fair value gap almost tells me nothing because we had a failed retrace down into this. It did not close below this. We have trace back up, and that trace up is now moving back down. I don't think this is a long video so far. I've only been recording for 40 minutes compared to the 3 hours I did. What was that, Wednesday? Tuesday? Something like that? That was terrible. Tuesday was an awful day. Looks like price is going to move downward. I want this candle to close before I say another word. We got 2 minutes for that to happen. I'm going to save myself 2 minutes on video time. I'll be right back. Okay, so on the 1 minute, we have a breaker structure back to the downside. I'm going to press sell on both this and this here. Sell, boom. Where stop loss, I'm going to put right above this fair value gap. Boom. And my take profit is going to be put just below this here. The risk to reward is comfy to me. I like this risk to reward. So far, I know that's not as much as we want to gain back, but at the same time, we're going to be looking and paying very close attention to literally everything throughout this. We're not going to miss a detail. I am specifically going to be hunting down breaks of structure throughout this entire endeavor because I do not want to miss out on any of it. Don't want to miss it at all. Place it above that. Take profit. Place it just below this. Good. Confirm. Yes. We're on the 1 minute. Change that. Boom. We have a break of structure to the downside, which means price ought to continue on down. Not here, but right in here. Not this. After this retrace, it comes down, breaks structure past this, continues down. I'm looking at a leg up right now on the 1 minute. I could see what the 5 minutes doing now. Did break structure on the 5, we broke structure on the 1. We entered on the candle after the close of the break of structure. There's an inverse for value gap on the 1. We've entered the trade. It's 9:15. Should be gold. What does news has to say? 10. 10 is what news has to say. We're going to do this so we can see everything nice and good. This is currently what I'm looking at on Trade Locker at the moment. So we broke structure on the 5-minute. We took the trade on the 1-minute. Saw this as a breaker block, failed to retrace back down. Cool. Price should continue lower along this trend here. From here, this looks fine to break structure. I mean, from here, we technically did break structure on this, not this candle. This candle here, we broke structure on that. Come back down. Okay, cool. Went back up. This was on the 5-minute. No, not this. There was something else on the 5-minute we thought was a breaker block. This right here. Because it didn't close below this low. It did not go anywhere near it. So price continues higher. From this, we're looking for price to continue lower. 1-minute, boom. Dang. Did we fail at calling that? Let's reevaluate per my notes right quick. So on 8 o'clock, we saw this right here get disrespected. Cool. We went to the 5-minute. From the 5-minute, we seen, okay, we came into here, no biggie. All the way up to here, we hit key level, right? From this, we wanted to look for the retrace. We wanted to look for a confluence, right? Outside of the key structure, key level being broke here. That would either be a break of structure or an inverse for value gap or an S&T divergence. I believe we got the break of structure first because we had a closure above this high here, right? From this break of structure, cool. We came down into the 5-minute. Again, saw a fair value gap here. Boom. That's the 1-minute on this. Boom. Inverse for value gap. 1-minute. Did it unfold like that? I think I'm wrong. Pretty sure I'm wrong. Leg down. Same leg down. This is 8. It opens. We see this here. Boom. From here, we look for pressure. Let's go with 5-minute. So I don't see a break of structure. I don't consider this a break of structure because we don't close above this, right? Instead, we wait for a inverse fair value gap, which we got off of this right here on the 5-minute, right? From this inverse fair value gap, we wait again for more of a confluence. We got a failed retrace, this right here, a breaker block. Breaker blocks are the retrace down, but it doesn't close below or near the level of the previous low on a downtrend. Breaker block. Breaker block form says sign of continuation. We're waiting for an order block. An order block is the trace back up. It's going to cause the liquidity sweep to the downside. It'll sweep this liquidity and from here continue lower. That's what we want to happen. That's what the goal is. That's what I've said before. That makes the most sense to me. I think that's what we did. And from there, I am confident. I think I'm okay with taking this trade. It's a short. We're going to treat it as such. We went from here to a 1 minute. Boom. Boom. We entered. Can't see it on that yet because it has yet to form. On this here, because we saw down up, break of structure. Boom. This right here, if I'm not mistaken, it does not go lower than this low, but it is lower than this low here. Because this low right here was passed, we entered on this candle specifically. The close of this, the opening of this. We said, okay, break of structure to the downside. Must mean that it's going to continue. We even got a fair value gap, even though there is no fair value gap within this, that this could be reversing. So from here, should see price continue down. Right now, the trade idea is kind of incorrect. It's gone higher, not lower. We broke structure out of these two highs here. We broke structure out of this high here. We have relative equal highs here. I think I may have made a mistake somewhere. Did I make a mistake? I don't think I did. I think I did everything to the best of my ability, actually. We have an S&T divergence. These are relatively equal highs. Down this down candle to the up candle. This says price wants to go higher here, so we have a little bit of S&T divergence. And this says higher there as well, so we have S&T divergence between these four candles, right? Breaker block was the way it was here. I think in the time it took us to identify this, we had a small lapse of data here, and it may have corrected itself. And from this S&T divergence, we have price moving higher. Like we broke structure and everything out of it, right? There's not much else to it. We broke structure. The 5 minute per that. We have a large leg up. First leg down since that leg up after we've entered trade. Again, this is 10 minutes behind, so we're like 2 candles ahead of this right here. You'll see a large leap up here. It'll close roughly in this, and then you'll see a leg back down. Leg back up immediately after that. In 1 minute, we have not broke structure back up, but it is looking like it's trying to invert that fair value gap. Is my trade idea incorrect? What did I do wrong? Let's look. Let's see. Key level, good. We know it was hit because it was disrespected. The fair value gap was disrespected. From here, we would look for a break of structure. Technically, it would be right here. This is our break of structure, right? From here, we'd be looking for what? A fair value gap on the 5 minute. Boom, we got a fair value gap here. From this fair value gap, what would we have been looking for? We'd have been looking for on the 1 minute break of structure or inverse fair value gap to the upside. This was our fair value gap. We got our inverse fair value gap right on this candle here, closed above this one. Technically, we could have entered on an uptrend here. We could have. If everything else hadn't said we'd be going down. The first thing I saw, aside from that break of structure, was the inverse fair value gap. We had 5 minutes. Let's just go back to it because why not? All right. Fair value gap. We waited for this inverse fair value gap here. So it wasn't going to continue down. Sure, it would have continued up. This makes sense to me. This inverse fair value gap, and then from here we would have waited for the continuation. I think that's what I messed up on. I think that's my biggest mistake. My biggest problem is misinterpreting the first confluence. Break of structures and inverse fair value gaps, their meanings, and how to use them when they're presented on the chart. Breaks of structure signal and are the confirmation that the trend has ended and that it has shifted in a different direction. Inverse fair value gaps are signs of instability, that price wants to move in another direction, that a break of structure is possible. I should be looking for the breaks of structure first and foremost, before looking for inverse fair value gaps. We are in a downtrend. The change that occurred was right here. Actually, specifically speaking, right here. We broke structure from this high to this high, which means price is going to go higher for a little bit. But because the higher time frame was disrespected, we should be seeing the continuation of move down, not up. It's currently at 9:30. Is news up? No, it's at 10. The biggest change was that next folder. So we should be seeing something vastly different to what we're seeing now come 10 o'clock. Just like that, we not only got a fair value up, but a break of structure back to the downside, and they are large moves down. I need to stay on the 1 minute and pay attention to that. I need to stop bouncing back and forth. So this would have been an order block on the 5 minute. A closed structure. That's what we were looking for. So if that were a breaker block that we had identified earlier, right? This right here, this were a breaker block. This is our order block. It closed above this, which means the general trend wants to continue higher. I'm looking at a stick, though, that is moving far down below. This is the same setup we had before with FOMC. So in the 1 minute, what am I looking for? I'm looking for a break of structure out. More accurately, I'm looking for an inverse value gap out. The leg will continue until we see a break of structure. I know it's not a guarantee that it'll happen at the price we want it to. At the moment, the trade idea was correct. At the moment, it is. I'm gonna pause the video. We'll see what happens. Okay, so I did a thing. I did a thingamajig, chat. Hope you are able to see this the same way I am, because I did a thing, right? I now have Trade Locker and Trading View on the same desktop. So now you can see both. You can see my chart work on the 10-minute delay, and you could see current price action the same way I can. And I'm not having to use my phone anymore to do this stuff. I can just show you and it look good, right? I hope this actually like is good for you guys. I hope it looks good for you. I do. We started with $100 on this. Our current profit and loss is there. Shoot, we could do this. I think. Can we do this? Yeah, we can. So this has all of our trades alongside Trade Locker or Trading View, since we took it, and yeah, this is currently where we're at. Order history shows up all that. Nothing there. Those positions. Cool, cool. Kind of wish it had like a journal, kind of like Trading View. It's okay though. No biggie. We just broke structure. Up, down, high, broke. We want to pay close attention to this, because if it breaks above this, we are definitely we might change some stiffs. On the 5-minute, we look to be good. Yeah, we haven't broke structure on the 5-minute. We're currently here within this fair value gap on the 5-minute. This is a retrace on the 5-minute. We're going to look and see exactly what it does. Every minute 38. Looking at it on my phone and on PC. For my sake, what I'm going to do is I'm going to continue looking at this on my phone while you guys get the full picture up on PC. I'm on the 5-minute for PC, so here I'll do this. Bring it back down to the 1-minute so you can see exactly what I'm seeing. We're going to expand this, keep it nice and presentful here. Yeah. I'm going to go back to Trading View. Trading View is where I'm going to do all my chart work, so that way we're on the same page. When we enter into Trade Locker, that's where I'm going to start looking for live price action and all that stuff. The Trading View is where a lot of the chart work is going to wind up going, though, just so we're on the same page. That's why it's tiny and above me. And the big view is the actual brokerage platform that I'm going to be entering and exiting trades on. So, that being the case, we're going to take a look here. We have break of structure. Looks like we're about to have a secondary break of structure here. It'll be where we entered. It's about to be 10. Three minutes, 27 seconds for this news to drop. This is the biggest impact news of the day. Dependent on this is where price is going to go. We currently have greater than forecast is good for currency. It went down. This was less than the previous. So I think price is going to go higher. Don't want to back out now. Don't know. Because I'm looking at price tanking right now. You guys can see it too on the bigger view over there. I hope I'm pointing in the right direction. I haven't noticed. Let's see, am I? Because that right there is trading view, right? That above me is, and then that right there should be, yep, sweet, I'm pointing in the right direction. That's trade locker. That's the live price action. This data right here is 10 minutes behind. That data right there is current. You see that? That is accurate. That is exactly where we need to be. Not that. We want trading view. We want to zoom in on this. Right here, we'll watch that carefully. Boom. Here's our 10:30 mark. 10 is just right here. And you could see it. We're already past that 950 mark. We've got a little bit to go for 10 to come around the corner. The forecast was negative 0.9. We want it to be greater. I'm saying, why is that bugging out? That was weird. We want it to be greater than the forecast. They're expecting a large change. I think it's going to be greater than forecast, but it's not going to be greater than the previous. We'll have a minute to find out here in a second. Alright, so 10 is done and gone. We have that there. We have break of structure. It still says in the downtrend. So we had a down up candle. Most previous low was broke below. We're technically still in a downtrend per that candlestick there on the 1 minute. Particularly talking about this right here. This candlestick, this down up, this closed below this, making this into a downtrend. We're just looking for it to continue on downward, to break past this low here and to continue on. If this creates a high, this will be a high we need to look at, be on the safe side for this break of structure out of. This will be the confluence. This will be the break of structure we leave on if it breaks up above this. Right now, we're doing pretty good. I think our trade idea is roughly correct. I mean, $2.87 on trade locker, and roughly, how much have we made on this? $750 off of that. I do not think we're going to be able to make back the $9,000. I do believe we failed the 3-month challenge. That's unfortunate, and I hate to say that, but reality check come in full swing. I understand and I'm aware that I'm not perfect and that I have a little bit more to learn. A little bit, a lot of it more to learn before I can confidently say I am a profitable day trader. I'm gonna pause the video now. I just wanted to say that about that stuff. Check news, do that stuff. Let's see, actually. It was less than forecast. So if it's green, greater than forecast, this, good for currency, it'll go down, but it was way less than forecast. So it's going to go higher. So we need to be on the lookout for a break of structure. Like that one there. I think it's our time to leave market. Was that a panic shot? Sure. Yeah. I am happy to say that we made not a profit, but a little bit back. It was nowhere near as much as we should have got. We should have been on the lookout, far more attentive than this. We should have looked at this even more closely. We should have looked at this a lot more closely, because technically we're still in a downtrend per this break of structure here, but per this right here. Was this trade a good one? Yes, it was a good trade. It wasn't a loss. It wasn't a complete loss. I'm getting better. I'm learning from my mistakes. I am much more attentive and clear about identifying the confluences and key levels needed to enter a trade. And from that, entering and exiting when I need to. That being said, there is a lot I need to learn. There's a lot more I have to learn. I'm doing pretty good. I'm taking all sorts of side notes. These notes are lifesavers, in my opinion. This right here has changed. 8231.41. $231.41. That's our current per trading view. The only reason I'm including trading view amounts on this is because I have been trading on trading view the longest compared to trade locker. I do intend to keep up with this note to keep it current, right? We're about to be in June, and I'd like to see that continuation go off the way I see it. That's unfortunate. So I made a mistake. I left trade, but it was reasonably so. News got the better of me. I'm going to say it and state it proudly. News got the better of me. This was erring on the side of caution, and from that, we could have made more. Being humble. Stay humble, gents, because greed might lead you to one golden road, but man, complacency will have you lose a ton. Thanks for watching this episode of Order Plus. If you enjoyed it, give it a like, comment, subscribe if you're new on the comeback. All of those tell me you like the video in some form or fashion and you'd like to see me improve. I understand this wasn't a over-the-top, spectacular, I won $1 million. This was more I wanted to not only put forth the knowledge I had, but improve upon the mistakes I've made along the way. And I think I've done that. I think I've improved drastically. Realistically speaking, I do strongly believe that we are not going to be making that 3-month mark a green, straight, like, we're not going to have 3 months profitability. I do believe this month and the past 4 trades combined broke the camel's back. I made a boo-boo, but I now know where to go, how to do things. I have learned a lot. It is unfortunate that we left. We could have made a whole lot more money right there. A whole lot. Oh well, no biggie. I've had my trade for the day. I will see you guys in the next one. Peace.